Welcome everyone. We are going to start on time. I am Pat Thompson and I am part of Transition Your Money, which is part of Transition Town All St. Anthony Park. And Transition Town All St. Anthony Park began talking about community investing and started what we call Transition Your Money back in fall 2017. And that was after some of us had attended a seminar that was taught by the Reconomy Center in, I never say this town's name right, Totnes, England, which is the center of the International Transition Network. And you maybe wonder, why is this a climate issue, investing? Transition Town's motto is not only a smaller footprint, but a stronger community. And that means resilience in the face of climate change. Economic resilience is a major part of that. And so tonight we're going to be hearing about investing in clean energy instead of fossil fuels, but also about investing in local businesses that we all need in our community. Those could be farmers who grow what we eat here, so that we create a local food supply, or they could be investing in more equitable ownership of buildings, so that the wealth is not sent out to faceless investors who are in other states and countries. And of course, how can we even do that? How can we make that possible if all those our investments in our country and the financial structures of our country are built around sending our money away from here, away from the things that support sustainability and local resilience? And so we have three panelists with us tonight to share parts of that picture. Yay. And they have sat in a different order than I have them written down, but that's okay. They're still going to talk in the order I have them written down.
It's a test.
It's okay. So in the middle, we have Rebecca Blumenshine, and she's going to speak first. She is the creator of Both and Finance, which provides education on the intersection of personal and community finance. Through it, she works to support the growing movement to build economies that actually work for people and our ecosystems. Rebecca has held jobs in corporate finance, which is a great insight into knowing what you don't want to do, grassroots nonprofit fundraising, and public policy analysis, and she has master's degrees in public policy and business administration. On the far end, we have Jeremy Kalin. Kalin, Jeremy?
Now the question is, can you do the law firm?
Yes, well, I don't know. That's a good question. He is lead attorney in the Impact Counsel practice at Avisen? Avisen. Okay, you're right, I can't. Law. He works to leverage the Federal Inflation Reduction Act, IRA, and was recently involved in the passage of the Minnesota Climate Innovation Finance Authority, which I like to think of as Minnesota's Green Bank. In the past, he chaired a White House task force on clean energy, climate policy, and investment. He founded a clean energy financing business and has served in the Minnesota House of Representatives. And next to me here, I never totally asked you to make sure I get your last name right, Nkuli. Nkuli Shongwe is the Director of Community Wealth Building at Nexus Community Partners. And she is also Board Vice Chair for the new Taproot Investment Cooperative, which is based in our own creative enterprise zone here in St. Anthony Park. At Nexus, she supports creation of cooperatively owned BIPOC businesses. And each of them is going to speak for about 15 minutes, and in the order I just said them, not the order we were sitting. And then we should have a good amount of time for questions and discussion at the end before the library folks appear magically to kick us out of here, starting at about 7:45. Tim, right here, is going to hold up a little card to let them know when they're running out of time, so that we will keep on schedule. And feel free to get up and get more refreshments. I meant to get a restroom key, so whoever the first person is who goes to get the restroom key, you can keep it down here so people can get up and use the restroom without having to go back upstairs. And then we are recording this to share with people who can't be here tonight. So there's a camera running back there, and when we get to questions, we're not going to pass the mic. You can just ask a question, whoever's it's asked of, either I will repeat it or you can repeat it, depending on how time is going and how it works. So Rebecca, you're first.
Right. Is this working? Okay. I'm going to set my timer too. Thank you so much. Yeah, my name is Rebecca Blumenshine. I'm really very honored to be here and included in this panel. I'm looking forward to the conversation. I have a website, as Pat mentioned, called bothandfinance.com, and you can find out more about me and what I do there. But I do have a full 15 minutes of content, so I'm going to get started. First, I have to make this disclaimer. This information is for general educational purposes only and is not investment advice. All of investing comes with risk of loss. And I'll actually talk about that a little bit. And mostly what I want to talk about today is how we can get started in local community investing. But to frame that up a little bit, I'm going to start just by going briefly through what is local community investing and why we should be interested. So here's the definition from the organization localinvesting.org, which is an excellent resource for just general information about this topic. They define local community investing as putting your money to work to help start, expand, and support local businesses for the mutual benefit of you, your local businesses, and your community as a whole. And I think we can further understand what local investing is by distinguishing it from what it isn't. So I'm not talking about conventional investing here. With conventional investing, we're talking about investing in stocks and bonds, very large multinational corporations. With conventional investing, there's often many layers of intermediaries between you and your investments. Intermediaries like advisors, 401k and IRA, administrators and managers, mutual fund managers, other asset managers. It's very impersonal. And conventional investing is almost always on the secondary market, and with the secondary market, you're not actually giving, when you're investing, you're not actually giving money to a company to grow, innovate, expand, whatever. You're really just, I like to think of it as trading digital baseball cards. Your money's just going to somebody else who has that baseball card that represents an investment that was once made a long time ago. Local investing is very different. Local investing is direct investments, often in companies that you know, certainly that are local and often are part of your community. With local investing, we're building community and relationships as part of the process, and local investing is almost always in the primary market. So that means your investment is going directly to a business to use to grow. Okay, so let's talk about why you might be interested in local community investing. And I thought it'd be fun to make this a little interactive. So here are some things you can do with local community investing, and if there are reasons that you're interested or you're interested in these things, okay, so you may be interested in local community investing because you're interested in supporting a more inclusive local economy. All right. You may be interested in building more climate resilience. All right. You may be interested in recirculation of local dollars. Awesome. You may be interested in community wealth building. And you may be interested in alternatives to Wall Street. That's great. All right. So we're going to have some really good discussion. And I'm sure you have other reasons you're interested in this, and I can talk about them. Okay, let's get into how we can get started in local community investing. And I'm going to be talking kind of big picture, how we can get started in our journey of local community investing. And I think we can think of there being these two categories, personal and community. And I think we can think about there being within each of those categories some like material factual information, like head information that we want to learn. And then in each of those categories, there's also charts information. And I'm proposing this framework because, as I mentioned, local community investing is very different from conventional investing. So no matter how much finance experience we do or don't have, I think almost all of us have a lot to learn in this space, and it's an emerging space that we are building together as we go. more sense as I talk. So, the first category, we are talking about our own money, our own investments here. So, at least that's what I'm talking about. So we are going to need to get to some facts together about our personal financial picture. What is your income, your spending, savings look like, and what do your investments look like? And how do these align to your current and future needs and goals? And then I also think it's important to take some time to understand the standard financial risk and return characteristics of our own investment portfolios. And for some of us, this is going to mean learning a little bit about what those standard ways that we measure risk and return in finance, and then looking at our portfolios and just having that as a baseline. And then we will need to know our liquidity needs, because as I mentioned, we're talking about investments directly to local businesses. Those are likely to be illiquid for a period of time, and it's helpful to know what your capacity is for that. And I think just as important as those material facts about our personal situation is taking time to do what works for us to get clear on our part about these topics. So this is things like, what are our values? Oh, good. Okay, so
Yes, thank you.
all right, these are things like what are our values, with how we holistically use our resources, what are our dreams for ourselves, for our loved ones, for our community, for our world, and what are our aspirations for how we use our resources to support those dreams. And then I also think it's very important along with thinking about and learning about and paying attention to the financial meanings of risk and return, I think it's very important to take time to think about what's our personal meaning of these terms, risk, return, and what are potentially the non-financial types of risk that we care about, and what are the types of non-financial return that we care about, and how do we want to integrate those into our investments. And I think it's important to take time to reflect on our emotions, because if we are a living, breathing person in society today, there's a very good chance that we have some feelings about our money, and there is a reasonable chance that we have feelings of fear and anxiety, particularly when thinking about our future, financial futures. And this is very normal, but I do think it's just helpful to be aware of them and think about what emotions are serving us well and what maybe aren't, and where they may have come from. And I have a lot of thoughts about this fear and anxiety thing and how we might want to navigate it, because when we're doing investing, as I mentioned, we do have to come face to face with the risk of loss. And even though that exists in any investments we have, some of us are not as used to thinking about that. And sometimes our emotions, I've noticed for myself, can get in the way of just making decisions in the moment about investing. Because we're just thinking about risk, and feelings of fear and anxiety. And I have some ideas of how to reframe that we could talk about in the discussion time, but don't have time here. Okay, because we, of course, as well as getting clear on our personal information, we obviously also need to know about the lay of the land. So we need to know what types of investment opportunities are out there. Here today is a great way to get started and connected about that. We need to know where do those opportunities align with our resources and goals. And this is where, I'm sure some of you know this, but I need to break the news that you will probably have to learn a little bit about securities laws to be doing local investing. Because anytime you give money to an entity with an expectation of a financial return, that is legally a security. And so now you're in the realm of securities laws. And it's highly regulated, and knowing a little bit about that can really help you understand how this all works and can help you stay within the law, which is also good. But we don't need to do that alone, luckily, and that's what's so great about community events like this and getting together, and then all these wonderful organizations that we can join to both learn about opportunities in the lay of the land and also be learning together about just the technicalities of investing. And it's also really great to work with others in our community investing group so that we can be successful in this final category. So this category is about building our capacity to listen and support our collective knowledge and our community heart. And this is kind of a big topic and a little bit kind of purposely broad. But I want to say we could just learn the information, focus on those other three quadrants that I just walked through. And we could ignore this category. And we could still do local investing. But would that local investing be part of moving the needle towards a more just and more truly sustainable economy? I don't think so. I think if we miss this part, we'll miss the nail on that one. And so I think this is essentially important, and I think if we prioritize community building, really listening to and hearing voices that represent parts of our community that are not represented well in our current economic and financial spaces, if we prioritize doing things where we're learning together in a collective way, and if we center or care for the histories of injustices and oppression that our communities still suffer under, then I think local community investing can be a piece of the puzzle of building a more just and sustainable economy. And that's certainly why I'm interested in it, and so I'm here talking about it.
Good evening. I'll do my best to swallow the mic. Can you hear me okay?
Yeah.
I would have that kind of voice that in grade school I was the one who always was caught whispering to friends because my voice just carried. We'll talk about that emotion and trauma some other time later. So I'm Jeremy Kalin. I'm a partner at Avisen Legal, A-V-I-S-E-N, in Minneapolis. We're a boutique business law firm. I work all over the country, and I help co-lead our impact counsel practice that focuses on the connection between deep sustainability and social entrepreneurship. It's really fun. It's like what most lawyers think that they want to do when they go to law school. And it's a real pleasure. So as a lawyer, I do have to make one disclaimer, very close to Rebecca's. I'm not your lawyer. I'm not providing legal advice tonight. Actually, Ralph, I am your lawyer, sorry. But I'm not providing even you legal advice.
You can just cite me as an example of somebody that you have an impact on.
And Ralph, you also have an impact on me. So it's vice versa. And I do have to comply with securities law all the time because the work that I do and the work that I've done for more than 15 years is to mobilize capital for the public good. And in particular, the work that I do is I'm kind of the community focused solar tax lawyer. And I say the because I'm on a renewable energy tax credit working group advising Treasury and the IRS on implementing the new Inflation Reduction Act. And I look around the table, really smart people who charge 3 times what I do per hour, and they all then at the end say, gosh, we really wish that our projects were your, we were working on your projects. So I feel very lucky we did.
Okay, we can talk about your rates tomorrow.
Well, if my rates for you were adding a 0. So how did I get to this work? It's kind of meaningful for me because just this weekend we returned my dad to the earth. He died a year ago, and we got to bury his ashes in little jars that I made, on fire jars. And like most lawyers, have a Bachelor of Fine Arts in ceramics. Made my living as a potter. That'll come up in a second. But I grew up playing at my dad's retail store in Sioux City, Iowa in the late 70s and early 80s. And seeing my grandpa and grandma be partners as the second generation, my dad the third. And then all of a sudden, we had moved when I was 8 years old into a bigger house than my mom always wanted to live in. And we're kind of living not quite high on the hog, but upper middle class. And then I heard the term bankruptcy discussed in our living room. Well, it was 1984, 85. The farm crisis was descending on all of the Midwest, and the relationships that my grandfather and father had built on a handshake and a smile, literally the banker that my grandfather had dealt with for 35 years was no longer in charge. But he didn't tell my grandfather that when he asked him to come into and renegotiate the swing loan that they had for opening up the first factory seconds outlet store in the upper Midwest in Sioux City, Iowa, next to the stockyards where Gateway Computers was about to be born. And so, long story short, it just disappeared. It made sense for me 23 years later, when I was serving on a committee in the legislature that was hearing, I was technically the vice chair, that was hearing the mortgage foreclosure deferment bill, and seeing bankers from New York City show up and say this, by deferring and putting moratorium on foreclosures to those who've been victimized by subprime lending and the predatory loan practices, you're going to make it impossible to lend in Minnesota for everybody. And I was like, I have been here before. And that coincided with then, I'll go back a second to a little bit of my biography. I said I was a potter. I graduated from the University of Minnesota and then ran up to Taylor's Falls and an hour away and made my living as sort of a village potter and talk about a community economy. I knew the people who used my pots. I knew that my neighbor farmers' fingers couldn't fit in my little teeny tiny handle, so I started making bigger handles for the coffee cups. And then my dear friend Larry really makes a runny but awesome marinara sauce, so those pasta bowls needed to get deeper. Talk about feedback, right? Really fun and amazing. And SL Energy had proposed at MSP a 230,000 volt power line that was going to run right through the heart of the federally protected St. Croix River and export power from Manitoba Hydro, at the time flooding the lands of the Cree people, with no local off-ramp, all going through bulk power transfer to Chicago. So 2 cents per kilowatt hour to harvest it, 10 cents per kilowatt hour to sell it, and no local benefit. So long story short, we were the first citizens group in the history of federal regulation to prove it was the wrong electrical solution to serve our local community. So talk about a great win. And I realized, depressed Jeremy, I'm a social introvert, and the social part of me was like not really in the studio making pots. I was down sort of trying to find my purpose at the coffee shop and doing this activism. And so I went to architecture school. It's funny that you laugh. But I was not as wise then as I am now. But I left the Midwest on purpose, trying to see more of the country at a deeper level than just traveling through. And 9/11 happened the first month. And so the conversations about the ethical and moral responsibilities of architecture were front and center. Then Paul Wellstone dies the next year, and I got to explain to all these New Mexicans what it was like to have a senator that knew your name and was truly responsible and was straightforward. And my friends would say, that sounds like you. It's like, no way, we're not in the same world, we're not in the same club. But I said, no, really, that sounds like how you make us engaged, interested, motivated. And at the same time, an architect who had written the Passive Solar Energy book, and Masria was up in Santa Fe, coming down to Albuquerque, sharing what he had finally learned, that architects are responsible for 48% of carbon emissions in the world. And if we want to do something about it, it's architecture and the way we plan our built environment that really is going to make a difference. So it was sort of an obvious solution. It took me a year. I'm not the smartest guy in the world. It took me a year to figure out, like, I'm not going to design buildings, I'm going to design policy, I'm going to come home, went for office, ran and lost, got elected to the state legislature, got to apply my passion for green building, well as policy. So in that same year, 2008, as the housing collapse and the economy collapse is impending and we're trying to do everything we can, we set up the Green Jobs Task Force about how to really create this transition, transform our economy and align markets better to the sort of on-the-ground opportunities that Red was talking about. So one of the places, I got to chair the task force with Ellen Anderson on the Senate side, and we went around and talked to everybody. And I remember in December 2008 being downtown talking to the bond manager at Piper Jack, who says, you know, I have $28 billion of bonds under management, but I can't exactly the way you described, the secondary market, et cetera. He said, I can't sell anything right now. Literally, it's like 0 degrees Kelvin in the capital markets. Except I can sell a pollution prevention bond, an energy efficiency bond, and a utility bond if it's a forward-looking utility. Those are the only kinds of financing instruments that are being sold right now. I just did some this week. And I said, I want to know more about exactly that. And he says, because they just pencil out. So when there was zero confidence in the economy, zero confidence in anything that people could trust, the investing in climate and in carbon reduction and in energy savings made sense, and still made sense. In fact, it made sense better than anything else, to the point that those who are responsible for managing risk were ready to rock and roll. So that's what I spent my 15 years doing, is better understanding and then facilitating and building those instruments that are risk mitigated, so as low risk as possible, good returns, and that are built on the same values that my parents and my grandparents taught me, around handshake and smile and knowing the folks that you're investing in. So today, I'm a reluctant lawyer. I only started, sort of the normal practice of law about 4 years ago. But I spend my time helping to expand the pool of investors and lenders into solar, battery storage, combined heat and power, district energy and district cooling projects at the community scale. So I've done crazy stuff like low-income solar on the roofs of 1,000 Baltimore homes, owner-occupied low-income homes, set up the first county-scale green bank in the country, et cetera. And most of the time, and a lot of the work I did for the White House, which I don't want to go into right now, was around a lot of the provisions that were included in the Inflation Reduction Act. So it's really fun that this thing sort of popped up, and it's like reading the energy article going, huh, we finally got that done. Huh, thank you, Senator Tina Smith. That part got included. Oh, the tax credit is now refundable for the solar tax credit for nonprofits. But I've also become a reluctant tax credit lawyer because the Inflation Reduction Act was originally scored as a $500 billion, $550 billion investment in climate, with about 350 billion of that in tax credits. The and a significant expansion to the solar investment tax, the energy investment tax credit to include things like standalone storage, combined heat and power, ground source heat, green hydrogen. I mean, basically, we are on the path. We have a national energy policy, and it is to get to zero carbon as fast as we can, and that's really our finance and our tax policy. Now, it was scored at a $550 billion bill with $350 billion worth of tax credits when it was passed. Within a year, the Joint Tax Committee came out and said, well, we actually think that it's 2.5 times that. And now I've seen an estimate that it's reaching $2 trillion. So why is this good news? It's good news because the way the tax credits are structured, it's not an appropriation, it's not congressional spending. It's a blank check to invest in climate projects through 2032, and there's no cap. There is no limit on how much federal taxes can be forgiven for investing in climate projects. I'm going to tell you the bad news. The bad news is Senator Joe Manchin apparently was the last to say we're not going to expand the universe. He didn't allow addressing what many of us have been calling for 15 years, which is the passive income limitation for being a tax credit investor. It's in section 469 of the code. And so most of us in this room can't actually serve as tax credit investors. You have to be a very specific kind of entity with a very specific kind of tax appetite. Unless you're a non-profit, a tax-exempt organization, or a local unit of government, or a tribe. And that tax credit is now fully refundable. For those, so 30% of a $100,000 solar project, if it's owned by a nonprofit and properly structured, call me, we'll talk about how to properly structure it, should be eligible for at least a 30% check from the feds. The rules, the guidelines have been out, the final rules are still in process, but it's a game changer. It now makes more sense for folks to invest in, to have nonprofits own. We used to have nonprofits try to find these unicorn tax credit investors. They're so hard to find. I'm going to go 1 minute over. Thank you for your comments. So the Inflation Reduction Act is a game changer, and then there's another game changer that I want to urge you to be involved with and take very seriously, which is the Minnesota Climate Innovation Finance Authority, CIFA. It is a new state authority that will exist by at least November 17th. It's in statute. That's what I was looking at when I was listening closely to Becca, but also wanted to reread the language that I helped write. I started working on this in 2009. Finally, 14 years later, it is law with $45 million of state appropriation, and we are currently applying for another $100 to $400 million of federal funds to provide financing to underserved and untapped markets in Minnesota that are all greenhouse gas reduction projects. 40% have to go to communities that have higher rates of poverty or majority of people of color in their census tracts, et cetera. These Justice 40 communities, which is awesome. And in the next, by the end of next year, the authority will have to adopt through a citizen-engaged democracy process around the state a strategic plan and an investment plan to guide the work for the next 2 to 4 years. One of the things that I hope that CIFA makes a priority, and I hope to be the outside counsel lawyer doing all these deals, not the one running it, but let me know if you have ideas for who should be the interim director. Job's open. It is actually literally posted. To insist that CIFA make community investment opportunities a priority for Minnesotans. Because the kind of cooperative and micro-lending, cooperative tools of micro-lending should be a priority, and CIFA has the ability to actually create those investment and loan facilities. So you can put in $10,000 at 3 or 4% to support a solar project on a tribal land and be matched by, you put into a pool to get to $5 to $10 million of local And lastly, I'll just say that we actually don't need to wait for SEPA to do that. One of the tools, in addition to, you should talk to Ralph about investing in his projects. He shouldn't say that publicly, I can say that. And being a micro lender for those solar projects for low income folks. But there's a tool in Minnesota called the PACE financing, Property Assessed Clean Energy. And it's run by the St. Paul Port Authority. Property Assessed Clean Energy. And to qualify for PACE financing, you have to have greenhouse gas reduction projects. And it's not really available for residential lending because we haven't found a need to actually go through all that rigmarole. But for nonprofits and commercial entities or let's say this were run by a nonprofit, not by the city, you can take a voluntary assessment on your property taxes and then pay back on your property taxes the cost of your project. And so zero down, you see the energy savings exceeding the loan payments. And the Port Authority needs capital. They have plenty there on their own, but a cooperative pool or a bunch of you individually could go to the St. Paul Port Authority and say, we have $100,000, we would love to lend at 2% for a qualified project, do you have some? And you could make that pool then become $50,000 or $500,000 or $1 million and actually truly make a difference and be secured by a lien on the property. So there are things that we don't need to wait for others to do. There are tools that we built now that are available. But I'm really excited and pleased to have you all here and honored to share the folding table with three really talented and smart women.
Hello.
That's better.
Well, there it is. There was a presentation. I had to grab my laptop, but I also talked through it, and I'm hoping my fellow board members will forgive me for that. Good. We're good. So a little bit about Taproot. A lot of it is going to really kind of lean on the themes that we've already heard earlier. But Taproot Investment Cooperative is a real estate investment cooperative located in the Creative Enterprise Zone of St. Paul. The Creative Enterprise Zone starts from like that 280 exit to Pryor. That's what we've established as CEZ. And a real estate investment cooperative, essentially it brings together community members who want to invest in local ownership, whether commercial, residential, etc. But with Taproot in particular, we're interested in investing in commercial spaces to maintain affordability for artists. And this is, as you touched on, this is a community wealth building effort. This is really trying to keep local ownership of the properties that are here. It's an intergenerational effort, and it's a space for people to know who owns the building. It's a space for our community members to get together to really buy the block. Essentially, we believe in REICs because of the long-term effects it will have in the community. They're generative. The dollar stays in the community. It circulates in the community, and it's not a get-rich situation. It's not a downfall situation, but it's a long-term investment strategy to really invest and prioritize the neighborhoods that we live in, eat at, worship at, work at, etc. And with the real estate investment cooperative model, it helps to keep that wealth in community versus like that wealth being extracted from community, which so often happens with investors. And we've seen a lot over the years, and more so too during the pandemic, as things have impacted us. So for Taproot Investment Cooperative, we started around March. I know Anne, who's here, and Sherm have been working so long to have this come up off the ground. But we've all decided and worked together to make sure that this cooperative membership is open to all members that are 18 plus who live in Minnesota, which is why the intergenerational aspect is important. Thinking about like how when we invest and what we use to invest too. So having an 18-year-old invest into local community having different ways to invest that are not extractive, having being able to redirect our wealth, grants, etc., to local ownership. Currently, the Taproot is open right now to all residents that live in Minnesota, and essentially, because it's a cooperative owned by the people that are in this space, members get to elect the governing body. For cooperatives, it's one member, one vote, regardless of what it is. So each member gets a vote in making the decisions to run this cooperative. And then on top of that, we, with the cooperative, the cost is $1,000 per share, which you could pay over time as well. And I know we are working on establishing a scholarship for that too. With the vote, with the $1,000 votes, you're able to vote on decisions that we make, give input on how we move forward in whatever building we get to buy. You get to be involved in the process, essentially, and get to have a voice in helping make those decisions. Essentially, and then on top of that, we also have preferred shares. Preferred shares is an additional way of investing into the cooperative. They're separate from the membership shares, where if we are buying a building, you essentially get to opt into investing a little more into that building, but it is still one member, one vote. It doesn't matter if you invest $100,000, $150,000, or $2,000, you will have the same vote, but the return might be different based on the percentage. So it's really, I know a few people are familiar with Taproot or have spoken to folks about it. It's really an interesting strategy, an exciting strategy. I will note that there was a building that we were wanting to buy and organizing to buy. And I think with the work that we're doing right now, have been truly invested in trying to figure out what works best and put so much due diligence in making sure that we make smart investment strategies, including talking to securities lawyers on end and getting fun lessons. But they're fun. It's educational, but also it's a lot. Getting all of that information. But we did come close to buying the prior building, but that fell apart due to some financing and some additional information that the seller had not disclosed. But still wanting to maintain that that is just one example of what we're trying to do, and there will be other opportunities to invest. And it's risky, it is, but it's also very much rooted in what the community wants to see. And so there'll be other opportunities to invest in different opportunities as we move along as well. That's kind of, it is a community wealth building effort. It's intergenerational, multi-generational, and it's going to take more than one investment strategy to get here, which is why I also want to know Midway Investment Cooperative and the work they're doing in the Midway area. Happy to talk more and answer some questions too.
So at this point, we are open for questions, whether it's general or specific to a particular speaker, even if it was just you didn't understand a term that was used, or some more major question about what someone said, or whatever. Anybody, go ahead and raise your hand. Ralph? Oh, well, let's not do Ralph first. Let's go ahead. So you say it first, and I'll repeat it, and then we'll see what it is.
Is there a list of companies in the area that you actually trust? I mean, they don't even have to be tiny startups, even inside or whatever. Is there something like that so that you can at least narrow the type of
The question is there a list of companies that someone could invest in that are locally based of different sizes or even small, large, whatever? And Rebecca wants to try and answer that.
I am very interested in there being one, and I'm looking for collaborators because there's models in other cities. There's one I really like in Baltimore that does have that. And there's best practices for how we could have a more thriving community investing ecosystem in our cities by having a central. It's called the Maryland Neighborhood Exchange in Baltimore. And I have even made a proposal for how we could try to do this in Minneapolis and St. Paul and use them as an example. And their executive director is happy to support us here in doing something like that. And what they do is they have a list of currently, the thing with local investments is they're not evergreen. There's like a certain time when they're raising money and then they're closed. So it really helps to have a central place that's sort of sitting between businesses that want to raise money from community and the community investors who are generally interested and like making those links when the opportunities are there. And one aspect of what they do is just house a website with a list of all the open investments in the neighborhood, which has been extremely successful. They have raised many millions of dollars, all for local businesses, with like almost 80% people of color owners of these businesses, and really good experience so far. So this is what I mean by it's like very emerging because I don't think we have something like that right now. I have a small list on my website.
That's really great to hear, and that you're interested in building that. It also makes me think of the local investment opportunity network, Lion, over there, which is not exactly the same thing, but is akin to that idea of, it's based on a model that came out of Washington State of basically a networking group that didn't exactly maintain a list, but folks would just kind of meet up monthly or quarterly. I can't remember what their frequency was out in Washington. It was Jefferson County, Washington, which is not rural, but a smaller town kind of area on the coast of Washington State. Businesses that had need for funds would actually kind of come and talk about their business and not exactly make a pitch, but kind of talk about their business when they had an active need. And then if a person had, an interest in that business, they would kind of meet up and make an investment. And part of that is just skirt securities law, because when you have a forum to say, hey, this person has a need for an investment, you are basically endorsing that investment, which is problematic from a securities law perspective. And so there's kind of, people get kind of hinky about this kind of stuff of even putting it on a list. I don't know if Jeremy has thoughts on that.
Yeah, I don't want to get into the definition of solicitation and advertising necessarily, other than there are ways to stay on side in lots of different environments. Really interesting networks here around early stage growth companies are the angel investor networks that go for angels. Largely, you have to be an accredited investor, meaning $200,000. Three different ways of becoming accredited or qualifying as individuals, but so a sophisticated investor, basically. And it acts very much the same way. Typically, Minnesota companies, their goals are a little bit less communitarian and a lot more, let's make big money and ultimately, get a significant exit. Not all. I always like when the conversation goes along the lines of hey, what's the total market size you think you could ultimately get if you hit it huge? Maybe $5 to $10 million total revenue. It's like, that's awesome, because most people think in the billions in that kind of startup space. And I just want to be of service and make good money. Well, that's an interesting conversation we have to have. But I think those angel conversations, because you're in exactly that room and making those introductions. They're sometimes acting as investment clubs and sometimes just doing direct introductions. Another interesting venue from the climate perspective is to look at the companies that are being accelerated out of a new accelerator called Grid Catalyst. My friend Nina Axelson has grown into a real juggernaut in just a couple years. And their local climate solution technology companies that are integrating with the grid, so connected to a utility in some way and helping solve these problems for utilities. And they're that kind of like early stage, seed money. Most of them I don't think have even gone to what we call Series A rounds. And so, putting some money into those companies is another significant pathway. I actually tried myself when I was facilitating financing several years ago. It's like, everyone asked me what stocks to invest in. So I won't tell you how poorly performing my attempt to do so. Actually, I can tell you the stinker, which is that I bought Peloton stock at the high. I've lost a lot of money on that one stock, and my kids think it's hilarious. So don't talk. I can't. I'm not your stock advisor that you should listen to. But
I have a background in finance, but I used to be a stock broker, so I know a little bit about it.
Yeah.
But I've been getting kind of out of it for a while, so I really something is going on. It's just really hard to know about. You can look at the Star Tribune, look at regional stocks, but not everything has to. From what I understand, there are different levels. Just like you have the, things can be at the NASDAQ level or smaller, but there's that even lower grades than that, and that's the part that I'm trying to figure out.
to be listed on pin sheets or other,
Yeah.
OTC, but really low key
And
exchanges.
to know more about it, it's almost like an Amazon review. What do other people experience with investing? What do they know about this company other than what they
Basically about the hard to find the kind of information, basically.
It's not really insider trading, but it's kind of like, experience with it.
And that's very true.
And I do think that handshake and the smile of being able to kick the tires and really see the product or the people is really critical. And my colleague Jeff Robbins at Avisen runs an angel network that pollinators. That's what it is, angel pollinators. And I would encourage you to shoot Jeff a note and connect with him as well, because he's really tried to build that same ecosystem you described.
Ralph?
I was just going to direct you to Social Impact Strategies Group, which is run by Elaine Rasmussen, who's also on the board of Midway, I believe, investment cooperative, and the board of Nexus Community Partners. That would be a great place to start because she works a lot with BIPOC startups and such, which would be great investment opportunities. But also, this room has a few people who want to invest your money. Taproot, Midway, Local Dough. So
I just wanted to widen that. That's all.
Before Ralph goes, Nkuli, can I ask you, I keep wanting to ask, so Nkuli in her day job works with cohorts of BIPOC folks who are starting or working with co-ops. And I always wonder, are any of them at points, their co-ops at points that need investments?
yes, absolutely. I direct the North Star Black Cooperative Fellowship, which is a fellowship of Black folks that want to start co-ops. We're currently in 7 cohorts, doing some orientation this week. And out of that, there have been a couple, Your Mama's House Co-op, Your Mama's House, literally, you go to Your Mama's House. It's an artist-led co-op, an artist and mothering co-op. So they have a house. She's based as an LLC, I believe, but she's got investments from Avisen, Nexus, I think Elaine too, and a few other groups. Nice Northside Investment Cooperative Enterprise, which is another real estate investment cooperative, which is working to acquire both residential and commercial spaces in the north side, working alongside the Metropolitan Consortium of Community Developers, MCCD. And then, I was just talking, and then others are still they're trying to figure out their stuff, but those are the 2 notable ones that are in existence that I would point you to as well. Thank you.
And also, I forgot to mention along those same lines, the Venn Foundation, VENN, has made a lot of co-investments and has worked, in terms of looking at the network. And I always like co-investments because someone else has done the due diligence already. And whether you agree with their decisions or not, they have the information in hand and well organized. So the process can be a lot simpler.
So the danger in what about Minvest? I did the second crowdfund, for Redlick, through Minvest. I found it very difficult to work with the website. I ended up sort of playing the good shepherd and helping my potential investors with public rambles. But what about Minvest? Is that, I'll just ask that, and then I also read out, I don't want to get too technical.
How about if we come back for the second question afterwards? You want to do that? Is that okay?
You mind if I get to ask it?
Okay, yeah, we will. So first of all, just so I'm going to repeat it so that everybody can hear it and the video can hear it too, which is what about Minvest? And first, someone's going to define what that is because not everybody in this room probably knows what that is. But Jeremy's going to define it.
So Minvest was a state effort at authorizing issuers of securities, so those seeking investment in their companies largely, a platform to advertise, to crowdfund within the state of Minnesota to solve this regulatory problem around solicitation and advertising to non-accredited investors, so that all of us in the room, regardless of our sophistication or our income or wealth levels, could invest $10,000 or $2,000 or $500, and that Kalin Technologies could advertise and ask and beg and plead you and tell our story, etc. So Minvest was a fairly clunky regulatory regime that the state legislature passed, and fortunately, I rarely say this as a former state legislator, was wonderfully preempted by the federal government when the SEC authorized what's called regulation crowdfunding, or Reg CF, which means that as long as you use an authorized portal, it's basically a platform to take the investments, and then do a series of disclosures that are the same disclosures, largely the same disclosures. If I was raising $10 million only through accredited investors, but now I can tell you, and I can advertise, and I can say I'll take everybody's money, whether you're an unaccredited investor or accredited investor. So Ignite could come in as an accredited investor, and Pat can come in as an unaccredited investor. Any one of us could come in. So Minvest really has run its course because it's been preempted by the Fed's regulation CF, crowdfunding. Most of the time, I'm going to quote my colleague Todd, that most of the time when people talk about crowdfunding, they agree with them. And you forget you have to build the product. It's like building a campaign. It's really, really, really hard. And I raised $50,000 for each of my legislative campaigns, and it was a lot of work. So it's not like manna from the sky. You do have to do all the same organizing work for all the work that we try to do. And that's what's happened in Minvest. And the user interface for things like WeFund, trying to think of the other.
There's a bunch, yeah. WeFunder, Vestibual, Crowdfund Main Street is one that I think is very good. I also have a list of some of these on my website too, but there's just like a number now of national crowdfunding platforms that are compliant with this Reg CF change in regulation that does allow for raising money from community members, non-accredited investors. Anyone can invest at least $2,500 a year via Reg CF. And it is true that it only works for certain types of businesses, but this is what they're doing in Baltimore. And if you are able to build the crowd to raise the money for your business from your community, these often startup businesses have a much, much better chance of being successful because you're doing all your publicity in advance as part of the raise. So there's also now great resources at a national level, like from other organizations outside the Twin Cities, that can help provide technical assistance to community businesses here. It's kind of like a chicken and the egg thing. If we can get it to be more of a thing here locally, more businesses could raise money that way and know that they'd be successful, investors
Okay, Ralph,
Okay.
next question.
Yeah, I didn't want to get too technical, but I am here to learn too, like everyone else. And I've been raising money for SoulStar, and okay, we got the potential investor and then the lender. Lending is easy; it's just simple interest every year that you declare in your taxes and all, just have to pay them back. It's very low risk, as long as I don't get hit by a bus. But it's been very difficult to convince people, and there are some people in the room who are maybe still trying to decide, and some already have, but they're just going to lend money. They don't want to invest because they can Joe Manchin, but they can't take advantage of the investment tax credit because they're not a real estate professional, solar professional, which I guess according to the IRA is actually a subset of real estate professionals because you can take advantage of it. So having set up SoulStar as an LLC, now I'm wondering, maybe I should set up the next one as a nonprofit. And then the nonprofit can utilize the tax credit as a refund, 30-40% of the front-end investment. And I mean, I could do a financial model of that, but wow.
Ralph has just asked a very complicated question that he should ask Jeremy on private time. I could be wrong.
If you started an LLC, maybe you should think about starting a nonprofit.
But it's about the nonprofit thing that Jeremy mentioned earlier. Sorry.
Yeah, the solar tax credit continues to be perplexing and infuriating, especially as somebody who even bought the book of the code. I was thinking, what should I have bought the book that's brought tonight? But one of the things we're seeing is, for instance, that Baltimore 1,000-home solar project that actually came out of Freddie Gray's death and the unrest that followed. I was very lucky to be assigned by the Secretary of Energy to the White House Task Force in Baltimore to figure out this financial engineering challenge, and then got to live the same thing here in Minnesota, in Minneapolis, with George Floyd's murder. A terrible thing to see happen like back to back, and I lived through this in Baltimore. But one of our challenges in Baltimore was because the tax credit, the city or a nonprofit could own it at the time. You had to find an LLC to own and operate, to be the general manager of the whole initiative for at least 6 years in order to bring in the tax credit. And we were searching for community-oriented investors who could take the tax credit. I had black men over 60 years old literally leap over folding tables to give me a hug when I would lay out this opportunity. Said, wait, I thought you were here to ask for a donation. You're asking me to invest and get a market rate return in my community? I've been waiting 30 years for someone to do this. Now, we don't have to find that LLC. Now, I'm not putting against this, saying that we should, but the intermediaries like Enterprise and Nexus and List, the local initiative support corporation, are perfectly positioned to be those asset owners and to take the credit. So it might actually be that you should be the developer, but that the owner should be a nonprofit, not the LLC. And those nonprofits are actually more rooted in the community than our special purpose entities and others. So this is the piece that I keep chewing on. We're getting more and more interest and attraction from pretty large scale intermediaries that are doing community investment, not unlike how Nexus and List and Enterprise that spun out in the 70s and 80s during the urban reinvestment movement. So I think there's an error there. Is that general enough, Pat, without being
Yeah,
So,
okay.
all right, so
Let's go. What are you doing? Okay.
you mentioned market rate returns, and just wondering, what is kind of the general return rate? How is that different?
Okay, so we have a question about what kind of returns are paid by different kinds of investments. It's going to vary a lot. Does somebody want to generally give some kind of range idea?
I'm curious what the co-ops are looking at first.
I'm just looking at Sherman and like I can't remember the number. I can't remember the number.
Talk about it.
I saw some names for that. My translation is right?
4%. 4%. Yes, 4%. That's the answer. Thank you.
More or less? Could be less.
It depends on how much you're
Yeah, it also depends on how much you're investing. Yeah, it depends on your investments as well.
has just said that returns from mainstream investors have kind of gotten more and more extreme in the recent past also.
Yeah, sometimes,
Go ahead.
just sometimes I like to translate market rate in my head as more extractive. And then there's terminology that is sometimes thrown around of, what is it? Well, below market returns. And I think if we can reframe that, depending if you believe this to be true, of the investment as an impact first investment. So that's why I think it's important to think about, this combo of return, of both non-financial and financial, if we're really interested in the more transformative community investments. You can almost see it as a red flag that if it's market rate, that it's not, the investor may be getting more from the investment than the community, and the impact may be missing there. And that's what most of our investments are, so I'm not saying that that's a terrible thing. But if you're looking for adding community investments to your portfolio, they are going to have a lower rate of financial returns likely.
Well, two questions about the one first. Is anybody trying to get the accredited investor requirement thrown out? Is Tina Smith working on this? Is there any hope in this area?
So the question was, has anybody, as a policy thing, trying to get rid of the accredited investor requirement?
I just know that the effort that was put in for the Jobs Act that passed in 2011, and that's the Reg CF thing, was very much motivated by this desire to open up investing opportunities, not just what I'm calling community investing, but all direct private investing opportunities to non-accredited investors. So that is really the point of Reg CF, and it was bipartisan. It was a big legislative victory, and that, so, and I don't know anything else.
I think you're right, Rebecca, that the sidestepping the definition and requirements is much more likely than removing it entirely, because it takes one bad investment story to then poison the waters for another decade, right? So, and that's kind of like, I'm in clean energy investments, so, and we're going to be working with the Department of Energy's Loan Guarantee Office. Some of you may know of the company Cylindra, that was the 17th of the 17 investments made in the first round of technology investments by the Loan Guarantee Office. 16 of them succeeded. By their own goal, only 14 showed.
And all we hear about is
We only hear about the one that failed. Well, the whole program was designed to have 1, 2, or 3 failures. So actually, the Cylindra is a sign of success. But I heard this all the time.
Tesla was one of them.
My cousin worked for Celine.
Oh, really? Amazing.
So,
Interesting.
Janet said you had 2 questions, but Betty had her hand up, so we have 5 minutes left, or 4 maybe.
Okay, so I just was curious if Taproot Investment, that group, is that limited geographically to creative enterprise zone? Okay, so it goes beyond the creative enterprise zone.
Yeah, as long as you live in Minnesota, you're a resident of Minnesota, you can be a member of Taproot.
Investments.
But the investments happen in the creative enterprise zone.
Although,
Let me clarify that. There's nothing in the co-op that demands that they be in the creative enterprise. We don't have a boundary. So it's possible they could be outside of the focus is on the creative enterprise.
The focus is on the focus is on the enterprise zone, but as Sherm said, there's nothing in our bylaws that says that we cannot invest outside of that zone.
so it could be an entity that doesn't own land in that creative enterprise zone, but somewhere else in Minnesota.
As per our bylaws, yes.
Unless someone else has a question, we have like 2 minutes, and Janet is the only person I know of who has a question.
What?
Let's go with Brian. Sorry, Janet. Brian.
I got my chance.
Good.
You ground source heating, and my efforts to find people who do that, they ask the plumber, they say you can't do it in Twin Cities.
Naturally.
And I figured it was not true. Any recommendations about how to go that other than start with the thermal?
So the question's about ground source heat in Minnesota, and whether it's technically and economically wise. Technically possible, economically wise, the answer is yes.
Like we have residential buildings that are right next to each other, cooperative.
Yeah.
So it'd be really nice if we could just combine all ground source heat for the whole area as well.
So I'm actually charged with this question of living values for our synagogue, where I'm the safety and security volunteer director, but also, they tap me in for energy stuff. So our boiler's dead. We will get lit through this winter, our gas boiler. And fortunately, some people said, why would we invest in a 40 to 50 year natural gas emitting central heating plant? So my phone call next is to the Center for Energy and the Environment, and to ask them for their both their studies that they have shown that they have done to prove that air source and ground source heat pumps work in Minnesota, and for recommendations on how to next proceed with the engineering, the technical side, and then getting a contractor out to actually bid the projects. That's on my experience that I've done in the last 2 months.
We are wrapping up because our friendly library staff person has appeared in the back.